Okay, Boat Club. It is Friday, November the 5th. This is a video that I previously discussed talking about the Boat Club's P&L, and I want to, in the spirit of a culture of open visibility and accountability, we're going to show you what a monthly Boat Club statement looks like and show you the income. Now, for those of you who don't really care about the details of what we're paying for rent and things of that nature, I'm putting about the first 2 or 3 minutes. I'm going to tell the story of the Boat Club financial picture for 2021. I think it's interesting. To me, that's what the numbers are. The numbers basically tell the story, whether it's forensic investigation or it's how we started, where we went, and where we're at today. So I'm going to try to make the first part of this thing as interesting as it can. Let me just say that I'm not a CPA. I'm not an expert. I am surrounding myself with some pretty smart people when it comes to this, however, these days. But you don't have to be a CPA to understand some of these fundamentals. I'm a little bit late getting this video out because I've been playing Crime Fighter, but that is at least on pause. I'm going to try to get this done in one take and keep it moving because we need to go down to the boat club and try to trap us a rat. So I want to start with a definition of some terms. And this, by the way, we're going to cover October, last month's P&L. It happens to be a pretty good one that I'm proud of. So I'm happy that October was decent in order to have this discussion. So there's really two things that we're going to be talking about that represent an important measure of the strength or the weakness of our business. First is top line, and you'll see right here on the very first component here, top line sales. That's how much revenue the boat club brings in. In this scenario, it's a month. You may or may not be surprised to know that the boat club is a very small business. It's going to probably do, maybe we might even do $900,000 in revenue this year. It's my personal opinion that we should try to move the boat club to be a $1 million business. Just that shift from where we started at just below 800,000 to get it up to $1 million revenue business in a year will allow us so much more flexibility and freedom and allow us to do important things and get us prepared for what is in our future, which we don't necessarily know. So that's one certainly critical measure of how we are performing. The other thing, of course, is the bottom line. And this is referred to as the net income or the EBITDA or EBIT, the earnings before interest and taxes. However you want to look at that. If you were to take a business and sell it, this is the measure of the value of the company. So there's usually a factor. How many times EBIT puts a factor to the value of the business. But before I break down these numbers, I want to first talk about 2021, where we started, what's happened until the beginning, and where we're at today. So in order to do that, this graph is showing the bottom line, so the net income of the boat club. Now, I've promised that one time I promised that I would never refer to the prior months or the prior year or the prior years. It is an important part of this story. So let me just refer you to the graph here. So this is January, February, and March. And this is the net income. This is how much money we had left over at the end of the month. And so this is 10,000 in the first month, and we had 6,000 in the second month, and about 6,000 and some change in the third month, it looks like. So our target, the target of a healthy business would at least be 10% of revenue. So we're kind of, the number you're kind of looking for there is, around $6,000 left over at the end of the month, unless we had some big expenses. Now, prior to January, these numbers were not on the top of the line. The boat club was losing money at a fair rate for several months. So when January hit and we had a positive number, that number was bigger before we started back billing some taxes and stuff that showed up. I thought we were doing good. You know, I was feeling pretty cocky in January, February, and especially March. I'm going, this is easy. Really, if you remember how we did this, is we went with the mantra that top line revenue solves all problems. We said that almost on a weekly basis. So we started down that road. We were trying to put butts in bar stools, and we were creating events every weekend, every other weekend, and we increased revenue. So it is true that increased revenue solves all problems. However, it also covers up loss. You won't have the same visibility and loss and inefficiencies when you start having these big revenue months. But for sure, it increases cash flow, and it saved us because we had built up some debt. Some vendors weren't getting paid. We had we had tax bills coming in. So it was the right plan and it worked. But let's look at what happened in the second quarter when we started closing the spigot. So you close the spigot, then you start to see, it's kind of a pressure test, if you will. So we're pressure testing the standard P&L just with day-to-day operation. Now, starting in that, so month number 4, I guess that's May, we cut back the events to about half, and then we didn't cut them completely out, but you can see things start to show up. You know, in the beginning, of course, and still today, I didn't know what I didn't know. Today, I don't know what I don't know. And there are new things becoming obvious to me as we go along. But if you look at this P&L, anyone in their right mind in June, it would get your attention. That is a loss of $14,000 in a month. So to put it in another term, you know, all the gains that we had basically drained out, not all of them, but a good portion of them drained out in June. So this got my attention. So a couple of things happened here. I started narrowing my focus on loss. Where is the money going? So we, you know, identified a couple of areas. Oh, one other note, in that first quarter, we also started reducing OPEX. We went back and looked at all of our operating expenses, and we tried to say, well, how much are we spending and why? And we basically were calling on our vendors. We cut our cleaning days down. We did everything we could to do both things, not just generate revenue, but to also reduce our operating expenses. And even after all that work, we got hit with a big negative month. So this is when I started really focusing and removed all layers between me and the Galley staff, because there was clearly some loss being occurred in the Galley. Now, not all of this 14 grand was Galley, but 7 of it was. Okay, now let's look at the next bit now. So I spent 90 days on the Galley project. So in summary of the Galley, without getting into too much detail, we were upside down weekly on food by, on average, $614. Now, if you add labor to that, we were losing about $1,000 a week on the Galley. $1,000 a week. If it's 4 weeks, that's $4 grand a month. If it's 5 weeks, it's $5 grand a month. June, we lost $7 grand. Not sure how that happened. So we started focusing on that. So I went 90 days really paying attention to that. So at some point, we did some heavy lifting on that particular topic, which brings us to this month. So I'm very proud of October. Now, I'm not going to tell you that all of this is because of galley food cost and so on, but this is a good month. Now, there's one other thing that I want to say here as part of the story. Every fourth month, every third month, we have an increase in revenue from the assessments. It's worth about $5,000. So looking at here, January and May and July and now October all receive, it's almost a bonus month. It's another $5,000 boost to our revenue income, so on the top line. So October has 5,000 of that is that assessment, but you can see during here we were not adding a whole bunch of events. We're just standard operating. And during this time, by the way, I had a budget, a break-even budget. And so break-even is about all I could hope for. So now we're starting to see a little bit of the needle move. So that's the year to date. And let me just say what I anticipate. Now, next month we have additional revenue that's going to come from the increase in dues and storage. It's not a lot, but all that's going to tally. It's going to add about, I want to say $3,600 if I recall. Eventually. Now, not everybody, some people are grandfathered if they prepaid and so on, so that's going to start trickling in. We really recognize that additional revenue in 2022, into first quarter, perhaps. But if I've solved the $4,000 a month drain out of the galley, those two things together should really make it so that we have a sustainable, positive cash flow where we need to be, somewhere maybe on that 10%. Okay? So that's the story. Let's go back to the P&L, and I'm going to break this down for those of you who ask. Susan's asking, I'd really like to see. So I'm gonna break it down and try to go through this without boring anyone who was interested enough to watch so far. Okay, so here's our income category. Rentals are really cool. That's quite good. Ice Club, we're doing $200 a month from the Ice Club members. That's also very cool. These are the assessments I was telling you about. So I think you can see these numbers. I'm going to try to make it a little bigger. You're going to see the description. So every third month, the assessment comes for some of you who never have to pay it. If you're not in the bar all the time like me and eating out of the galley, I think you spend $30 a month. You pay some assessment. I don't know how much it is because I've never paid it. And then we have dues. This is what we collect in dues. And then we have storage. So we're going to do more for storage in the coming months. We've started adding some paddleboard storage, and we talked about bicycle storage and things of that nature. So we're going to trickle up this storage fee income every month. So total dues, fees, and income, $36,000 in a standard month. Okay. Now, that's the front end of the house when I refer to the front end. Now, let's talk about the back end of the house where we're actually selling some stuff. We don't need to see all the details here. This is a good month in the bar, $29,000. An average, now the new average of the galley is about $8,500. Take out tax, the sales of product income, $35,000. Let me close this down. You add all of that up, and our top line, $74,000 in October. That's supplemented by the $5,000 assessment. On average, we're down around about the $68,000 a month in income, and that revenue stream puts the value of our annual income in the $800,000 area. Okay, is that clear? Now, this is what some of you are really interested in, is our expenses. First, we start with the cost of goods. Cost of goods is what we spend on bar supplies, alcohol, and food, things of that nature. So cost of goods, without getting into all the weeds there, Bar supplies in this particular month is $8,300. Galley food is about $8,300. Okay. Cost of goods sold 16, and gross profit. If you just look at the gross profit, of course, this is goods sold and dues, so that's not a really good measure of that. But gross profit at this point is $57,442. Now this is before we pay rent and add all our expenses, and I think this is the area that Susan Fall and a couple of you guys are really keen on. So let's break this down. Now, this is a big number and it irritates me. This $1,700. What this is, every credit card statement gets a fee, and so when we have a lot of sales and a lot of credit cards, most everything's a credit card, somebody gets a piece of that, and every month it's about $1,800, something like that. Other bank fees monthly, so bank charges, that's it's about $1,800. Contractor payments, so this is your entertainment. So Friday nights we pay $200 for a duo. Saturday gigs, $400. Varies a little bit, but just to give you an idea of that. So in October, that's a little bit high for a month, but only by about 20%. So we must have had maybe we had an extra weekend in there, not sure. Sometimes we use contract labor if we need a bartender stand-in or a chef stand-in. Total contractor payment, $27.31. So dues and subscriptions, this is mostly software. Insurance. So we pay, that's our insurance bill there. Directors and officers liability expenses. So this is in case we misbehave and somebody tries to sue us as a director and an officer. And then some additional excess liability. So insurance is about $2,100 a month. Legal and professional, this is carryover from earlier in the year. Monthly expenses. Okay, what do we pay for landscaping? $240. Actually, that's about what I pay at my house right now. Laundry. So laundry is bar rags, chef's clothing. There's mats. So, you know, I think it's a lot, but it's down from where we started. But that is an expense for laundry. It's under laundry, but it's actually a little bit more than that. Pest control, here's your rent. You got, you know, I don't know why it's such a mystery. I heard we paid this for rent. I heard we've been paying $12,662.46 for a long time. I didn't go back in the full history, but that's our rent. It's a pretty good deal. We got 4 acres. Don't tell the city I said that. Security, some of this stuff, we're not getting great value on our money, but that's what that costs. Total security, $468 in a month. Telephone's not working right now, so that's wasted $60. Here's some utility stuff. That's City of San Diego Public Works, $900. Internet. So this actually is 2 months. So if I had to correct it, I'm going to correct that. That should be $500 for the internet. Janitorial, so Janiking. Propane, that was a low month. Sometimes this is $300 or $400, depending on how much we're running those heaters. San Diego Gas and Electric. The ACs were clearly still churning during this month. This should be expected to drop pretty quick. Satellite TV, and then waste management. Total utilities, $5,805. Let me close that up so we can see that a little. So our total monthly expenses, about 20 grand. Okay? And then we add in payroll. This is everybody that's on the staff. It's bar staff, galley staff, bookkeeping, accounting. Total payroll expenses for a month, $11,000. Okay? A little postage, a little repairs and maintenance. Social events expenses. We also have social events income too, so that $1,200 generally has a return on that investment. This is our monthly property tax, $437, in case you're wondering. Yes, we still pay property tax even though we rent. I'm not sure why. So total expenses $41,000. All right, net operating income $16,000. If I could get a $16,000 net income every month, I would be extremely pleased. So that is the breakdown. And if that didn't bore the crap out of you, you should play it again and get the details. By the way, I'm all about creating a culture of openness, full visibility whenever possible. If it comes to things of employment nature, things of that nature, we need to be very careful about that. But primarily, the new culture I want is accountability. I want oversight and accountability. So we have implemented changes, and we're basically paying people now with incentives that are tied to performance and accountability. So minimum performance standards, accountability, and then really key important is oversight. Because the nemesis, if the boat club has a nemesis, it has had a nemesis, it is the lack of oversight. And without the lack of oversight, you can generate bad behaviors, and things just run astray. So, especially with the new guys on the board, I got, between John Doxey and Spencer, and you team those guys up with Brian and myself and all the other people who ask the right questions. I think we're really on to something now where not only can we make this thing stable and sustainable and a little bit profitable, although we're going to have to respin that at some point, but we can set minimum performance standards and standard operating procedures for the future, right? Because I don't want to do this forever, because if you don't know, it doesn't pay. Why I'm so into it, I have no idea. But so in the end, it looks like in the end of 2022, that's my goal. My goal is to leave the boat club solid financially, and to leave stopgaps behind, if that's the right term, that will prevent the deterioration of what we did this year, what we've been trying to do this year, and what we intend to continue to do into next year. So that is my accounting update from a non-accountant, non-CPA guy. So if I slaughtered some of the terminology for you CPAs, don't send me an email, because I never claim to be an expert. So that's what I got. I'm going to the club to try to trap a rat this evening, and we'll see you guys.